You think buying a 2-year-old luxury car saves you money? Wrong. Because even if you dodge car depreciation, the UK government is still extracting thousands of pounds from you every single year. This is the luxury car trap, and most people don't even realize they're in it. Today, we're going to break down what this car tax actually is, why it hits used car buyers, and exactly how much it costs you over 5 years. You're quietly losing over £3,000 for owning the wrong car. So, what is luxury car tax? Let's strip the branding. This isn't actually called luxury car tax, it's officially called the Expensive Car Supplement, part of the UK road tax. Here's how it works. If your car cost over £40,000 when new, you pay an extra £440 per year on top of the normal tax. The normal tax is £200 per year. Now, this runs for 5 years from year 2 to year 6 of the car's life. So instead of paying the normal road tax of £200 a year, you pay £640 per year total. That's the rule. Now here's where people get wrecked. Most people assume I'll just buy it used and avoid the tax. No, the tax follows the car, not the owner. So if someone else bought a £50,000 car and you buy it 2 years later for £30,000, you still pay the luxury tax. You inherit the penalty. That's the first trap. Now let's imagine a scenario where the original car price was £45,000. You buy it at age 2 and you keep it for 5 years. Now remember, the luxury tax applies from year 2 to year 6. So if you buy at year 2, you're paying years 2, 3, 4, 5 and 6, a total of 5 years. So what's the annual cost? The standard tax will cost you £200 a year, but the luxury supplement is an additional £440 a year. So the total you pay per year is £640. So over 5 years, you will pay a total of £3,200 tax, which normally would have cost you £1,000. So you're paying an additional luxury tax of £2,200 for owning that luxury vehicle. The UK government seems to want to penalise you for buying an expensive car. They're charging you £2,200 more for a car you didn't even buy new. So why is this a wealth killer? This is where most people miss the bigger picture. So let's just zoom out. That £2,200 is dead money. There's no asset created. There's no resale value. When you buy a 2-year-old luxury car, you already take insurance premiums, maintenance costs, and the depreciation tail. Now add an additional £640 per year fixed tax drag. This means your cheap used luxury car isn't cheap. It's a cash bleed disguised as a bargain. People think I saved £15,000 buying used, but ignore the £3,000 tax and the estimated £5,000 plus for maintenance. There's obviously a high insurance cost for the car. So what is the result? False economy. So who gets hit hardest? The tax just doesn't hit supercars. It hits mid-range BMWs, Audis, Teslas and family SUVs. Because £40,000 is no longer luxury, it's just a normal car price. In fact, inflation means more everyday cars cross that threshold every year. So this isn't a rich person tax, it's a middle class trap. So how do we avoid it? You have 3 options. 1, you can stay under the threshold, buying cars originally priced under £40,000. Secondly, think about the time you purchased the car. Buying cars older than 6 years means that the tax disappears after that. And number 3, be careful with EVs. From this year, the threshold for EVs is sitting at £50,000 for electric cars. So here's the blunt truth. If you don't understand tax, you pay it blindly. And the UK luxury car tax is one of the easiest ways to look rich, feel smart, and quietly lose thousands of pounds every single year. Some people would say, should I lease a car or buy a second-hand luxury car? If you lease a car, you pay for depreciation only and you never own it. And if you buy a second-hand car, you pay once and then own a depreciating asset. That single distinction drives everything. So, if your car is a £50,000 luxury car, which is brand new, you will have to maybe lease it for £600 a month. Now, the used purchase price for the car at 2 years old might be £30,000. So let's talk about the option of leasing the car, cycling it twice over 5 to 6 years. So the car will cost you £600 a month times 60 months, which is £36,000. You pay a deposit and fees of about £3,000, so the total cost for you out of pocket is £39,000, and what you own in the end is nothing. Why? Because leasing is literally paying for the car's depreciation plus the finance margin. Okay, let's talk about option 2 of buying a second-hand car. The purchase price would be £30,000. Depreciation over 5 years would be about £10,000 to £15,000, and the luxury car tax that we discussed earlier would be £2,200. So the real cost will be around £12,000 to £17,000. So what do you own at the end? You were a depreciating car, which is worth around £15,000 to £20,000, but you own it. So let's do a side-by-side comparison, just so we are all clear about the options. Now, think about either leasing or buying the second-hand car. The 5 years spent for leasing a car is around £39,000, and the second-hand car will cost you £12,000 to £17,000. Ownership: with a lease car, you don't own it. With a second-hand car, it's an asset. The monthly cost for a lease is obviously lower upfront, and for a second-hand car, it's higher upfront. With depreciation, there is no depreciation. With a lease car, you avoid it. With a second-hand car, you take it. With flexibility, the lease car is a locked contract, whereas the second-hand car, you can sell at any time. Mileage limits, the lease car, yeah, probably. And with a second-hand car, no. Now, hidden fees. With a lease car, they are high. And with a second-hand car, they are also high, especially when it comes to repairs. So this is where people get it wrong. They think that leasing a car is cheaper on a monthly basis, so this is equal better. Now that's shallow thinking. Leasing feels cheaper because you're only paying part of the car and the payments never stop. Buying feels expensive because you front load the cost, but eventually it goes to £0 per month. So over time, buying crushes leasing cars financially. Number 2, ignoring compounding losses. Leasing twice means you pay £39,000 and end with nothing. Whereas if you buy a car for £30,000, you still hold £15,000 and an asset, and that's a £20,000 difference between the two options. Number 3, overvaluing the new car feeling. Leasing sells status, convenience, and predictability, but financially you are just renting a lifestyle. What about the hidden costs for both sides? What are the leasing traps? The mileage penalties can be high, even £1 per mile. Damage charges at return, early exit penalties, and admin fees on fines. What about the used car traps? The repairs, big expenses, warranty gaps, insurance is still high. So leasing is equal to a predictable bleed, and a used car is unpredictable spikes. So what should you do? Who should do what? So decide to lease a car if you optimize cash flow and not wealth, if you want zero hassle, and you want to change your car every 2 to 3 years, and you don't care about ownership. And decide to buy a second-hand car if you optimize for net worth and you can handle maintenance risks, and you aim to keep the car for 5+ years. Okay, so what is the conclusion about leasing or buying second-hand? If your goal is to look rich, lease the car. If your goal is becoming rich, buy a second-hand car and hold. Because mathematically, leasing is equal to permanent expenses and buying a car is temporary cost and residual value. What about if you don't have any money? Let's do a final stress test. The only time leasing competes financially with buying a car is if you invest the capital instead of buying, or if you get heavy tax advantages through company cars and salary sacrifice. Outside of that, leasing a luxury car is just structured overspending with better branding. What are you doing as a Sync woman? Are you leasing or are you buying? See you in the next video.